Hello, investors. Today, we are going to talk about a very interesting topic. Rather, I could say that it's a very important topic, which could literally save you from traps like PC jewelers. So, if you can see this stock chat pattern, right? So, from 2014 to probably until 2018, the stock gave a massive run up, but post that the stock almost crashed. So how do we identify such businesses, and exit early? So I'll just take an example of this company, Balu Forge. So if you just glance through the various financial parameters, right, the company looks good. Like the stock P is slightly expensive, but yeah, manageable levels. But even the debt to equity is very low. And if you go to the financial performance, like the year on year profit and loss statement, the sales are increasing and also the net profit is increasing, and PBT is also increasing. And if you go and see the balance sheet, the borrowings have not increased substantially, but the reserves are increasing. But how can we dig deeper into this? So, this is where cash flow statements become very important. So the first one is cash flow from operating activity. So what is this exactly? So if just take an example of a business which has a revenue of 100 crores, and after paying for the salaries, land, equipment, and also maintenance, electricity, and other operating costs, whatever money is left with the business is the operating, I mean, cash flow from operating activity. So this money straightly goes to the bank. So this is the, I could say that this is what the business is getting in this year. So this ideally should be positive, but in this company, right, it's negative for 2 years, March 2022 and March 2024. But this doesn't say much about anything, right? The company might have taken an expansion, or they might have invested in new facilities, due to which the operating cash flows might be negative. So that's where checking the financial cash flows from financial activity also becomes important. So before we go to that, in the profit and loss statement, right? Just remember this year ended 2021. So after March 2021 financial year, I mean during the financial year of 2021, they have the net profit of 8 crores, right? And in the balance sheets during the closing of 2021, they had reserves of 7 crores. So 7 plus 8 here goes to 15. And in the cash flow statements, if you could see that in the March 2022, which means the financial year 21-22. So 21 closed, and until 2022, they took 52 crores from something called as proceeds from shares. So, what exactly is this? So, this is nothing but they're raising money from the investors. They might be QIP, qualified institutional placement, or retail investors such as us, or through some other means, right? And they have also got 26 crores from borrowings. So, if you add this, that is around 78 crores they got. And earlier the profit was 8, 78 plus 8, 80, 86. And then the reserves is 7, 86 plus 7, 93. So ideal case, the reserves should be 93 crores here. But what you see, after the 2022 financial year ended, they have a reserves of 75 crores. That's a big red flag. So what exactly is happening, right? This is where, if you see, okay, yeah. So in the operating activity, right, if you just expand it, so you have something known as receivables. Again, what is receivables, right? So say suppose I'm running a business, right, and somebody buys a product from me, and they don't settle the payment instantly, but they say that probably I'll settle it in 30 days or 60 days. So that money, which is not yet accounted for, but I have sold the product, but the money is not yet coming into my bank account. So those numbers are receivables. Ideally, it should be positive, indicating that somebody should give me money. But in this company, receivables are negative. So what does it indicate? So it just indicates that the company owes money to the customers. You might ask, are you crazy? Like, how is it even possible? This is only possible if the product is returned, right? I'm coming, I mean, I'm explaining it again. So receivables, generally it should be positive, saying that I have to get money from another, some person who I have sold the goods to. But if it is negative, it says that I have to pay the person money, right? That happens only in the case when the product which I have supplied is not up to the standard, and the person who purchased the product returned that product, so that I have to pay back the money which I initially took as sales. So this is not a one off year. Consistently the receivables for this company is negative, right? So this is a very 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 what can I say, red flag. Not only that, if you see one more thing, right, in this company, but in the balance sheets, you can see that the equity capital is consistently increasing. So why is that? So to earlier, right, in the profit and loss statement, we saw that the company has increased, like the revenues of the company is increasing, but I told you that the receivables are negative. So whatever sales they have done, they have to return that money, but the company doesn't have the money. So what do companies do? They take the money from the shareholders, and in bull market it is very easy to take money from the shareholders. So that is where you see the share capital, equity capital is increasing. And if you see this another in the financial activity, financing activity, you see the proceeds from shares, right? 20 crores they got in 2021, 52 crores in 2022, and 262 crores in 2024. So this is a clear case of earnings manipulation, right? The product is sold, but the product is returned, but that is not indicated. And to hide that losses, what is the company doing? The company is just raising money from the retailers. And if you see one more thing which I found a little bit concerning, is that the company, if you see the presentations, right, they're everywhere. Like if you see, they say that they're venturing into EVs, and recently they said that they're venturing into aerospace defense. So the company is trying to so I think the company is trying to get traction here by saying that we are entering into new businesses and new other things. They're selling their company, basically they're marketing themselves, so that they can get money from the shareholders. So this video was about how to check earnings manipulation, and how to actually check this profit and loss statement and all these cash flows. Hope this is an very interesting session. I made it as simple as possible, but yeah, do check all these cash flows and cash flow statements, so that you might not get scammed. So that's all for today's video. In our next video, we'll explore another sector experiencing massive tailwinds, and identify the businesses which are poised to benefit the most. So, what are you waiting for? Electrify your portfolio, seize the opportunity, and witness the power of investing in tailwinds firsthand. Hit that subscribe button, smash the like, and let us make some serious money together. Stay tuned, stay curious, and stay winning.